Well, markets taking a tumble on Friday, extending their losses this morning following news that US regulators have charged investment bank Goldman Sachs with fraud. There's been spillover to our own banking sector too, with shares in banks down sharply on Friday and again today. And of course, at the same time, markets have also been weighed down by sagging airline stocks as planes remain grounded due to Iceland's volcano. Joining me to chat about all this is Chris Hart. He's Chief Strategist at Investment Solutions. Chris, thanks for coming in this afternoon.
My pleasure.
Chris, shares in Goldman Sachs down 13% on Friday, and it looks like regulators are going to be going after banks again. Do you think it's justified, though, with what's come out of Goldman Sachs?
Yeah, well, one needs to establish whether they're guilty or not, but that's the polite way of saying let the legal process take the course. The course. I wouldn't be surprised if this ends up in what one calls a no disclosure settlement. In other words, the content is not made public because of what could be coming out. But I thought one comment that somebody made is that cockroaches don't occur singly, or in one there's more than that. And
whole nest.
The question is this just flying a kite? Whether the SEC just wants to sort of just focus on a bucket rather than the ocean, because effectively another, I think, interesting comment was that this financial crisis has been the biggest bank heist in world history, but this was the banks doing the heisting, all right, in terms of the bailouts. But the important implications going forward is that firstly, I think the industry now faces, how could you say, the same prospects that the tobacco industry has faced, squeezed by hostile regulators on one side, but we'll see if this is the only charges brought. If it's the only charges brought, I would suspect that this is just flying a kite to placate a Main Street which is increasingly resentful of how could you say, exaggerated bonuses, all right, while the debris of the fallout is still sitting on Main Street's door. If that's just to placate that, well, then we won't see much further. But of course, if it's a how can you say, a discredited SEC trying to re-establish its credibility and its muscle, there may well be more, and there may well be more institutions that follow. And that means you're looking at a tobacco situation where you've got increasing hostile regulators on one side and just a proliferation of class action lawsuits on the other side. And certainly a charge like this may well start to actually bring a season of class action lawsuits against the industry. So it may well be tainted for some time.
And of course, we know of the banks. Goldman Sachs came out of the financial crisis, has one of the strongest. It made record profits of $13.4 billion last year.
But still needed a bailout.
Still needed a bailout, though, and of course, using some of that bailout money to trade.
Yes.
But the product that it came up with, this collateralized debt obligation, yes, that's what banks do, that's what investment banks do.
Exactly.
Has it done anything wrong? Is it justified in what it's done?
Well, the point is if one looks at what the SEC is busy charging, is that they actually put together a particularly nasty combination, which they then sold off as an investment, knowing that it would fail. And that would be where the fraud aspect would be, because you'd think buying an investment from what would appear to be a venerable, well-established institution like Goldman Sachs, it would be clean and that the homework is done. But if the homework is done in a bizarre way to fleece the investors, it is a possibility. One needs to realize that the investment banking scene, whereas that is what they do, and they do it on a routine basis, there's an enormous pressure to do deals and get the trading done, all right, because of the bonus-driven environment. And so whereas the top management might actually be almost oblivious, there is a risk of a breach in ethics at the low end, at the trading end, to achieve the results so that the bonuses can be paid. And that's part of the ugly face of investment banking that needs to be recognized.
Of course, there are two sides to any transaction.
Absolutely.
And yes, Goldman Sachs and its partner in this, that was the hedge fund Paulson & Co.,
yes,
made money. In fact, Paulson & Co. made $1 billion apparently, yes, out of this CDO. And Royal Bank of Scotland, some German regional, yes, banks on the losing end. But
yes,
it could have gone the other way. Not feasibly, but it could have gone the other way.
Yeah, well, this is why it would be interesting to see that the case is, we don't know, as you say, when all the stories are eventually told. But if there was an asymmetry in information, that was fraudulent, obviously that needs to come to light.
No, sure.
But we don't know that. As you say, let's see what happens. I suspect, though, if the SEC is building its credibility, it would possibly bring more charges and maybe to a broader range of institutions. I think it would be very amiss to say that Goldman Sachs would be the only, assuming that there is some culpability, that they'd be the only institution that could be involved. But
as you said, a nest full of cockroaches somewhere around.
Yes.
I mean, just looking at the impact it had on the markets on Friday. Wall Street down, of course, so ending the rally we had seen on Wall Street. Banking shares down significantly.
Yes.
Our own banking shares down quite a lot. We had ABSA down 2% on Friday. Our shares down 2.5%, the banking sector today. Is there a spillover effect? Is this a fear of greater regulation coming through and affecting banking stocks globally?
Well, this is why I think that the financial sector might be going into a period that the tobacco industry had to face. Regulators putting increasingly harsh regulations, and if anything, Congress has a history of scoring own goals. The Enron scandal resulted in Sarbanes-Oxley, for instance, a completely ridiculous, over-the-top kind of regulatory structure. Could they do the same in the financial sector? The one concern that one would have with the financial sector, if one of the more harsher proposals to actually separate trading from the actual banking, to ban proprietary trading, that could have quite a big impact if that is something that has less resistance going forward because of this. Because when one looks at the profit profiles that have been coming through, the actual, core operations have been struggling, and the rise and recovery in bank profits have been in the trading and investment banking side, and so that would actually be ripping the guts out of a core of the banking industry's profits, and that of course would be of concern to the investability of these shares going forward.
And of course, Goldman Sachs is just the latest hurdle that markets face at the moment. Of course, we had that volcano last week. We don't have many listed airline stocks in South Africa. We have Comair. And One Time, of course.
Yes.
And One Time doesn't fly to the UK, so they're kind of saved. But I mean, this has huge implications, and we were looking at $250 million being lost in revenues a day for the airline industry. Much greater implications as well. And then, of course, we also have Greece in the back burner as well, and meetings cancelled with the IMF and European Union because people just simply can't get there. Yeah,
and that clock is ticking. That has a particular important time decade to actually solution. So it does mean that the markets are being taken to the brink. One's then got to ask the question, is this just a natural catalyst or just a catalyst for a natural pullback that one would expect after the markets have run quite hard over the last, say, month and a half or so? And my take is that is the case. I don't think this is a bull market breaker at this point. The actual drivers, of zero interest rates flooded the system, flooded with liquidity. That liquidity is looking for risk assets to compensate for the zero yield environment. I suspect you take profits, you're sitting with cash. It will be applied back into the market at some stage and more.
If this is the catalyst for a pullback, what sort of pullback do you think would be healthy for these markets? Because we have run very strongly over the past month or so.
Yeah, I look at it in terms of the something like the S&P, which went into consolidation mode, and 1150 was roughly the breakout point of a sideways
and then it went up to 1200 last week.
Exactly. Now that it could well pull back to that breakout mode, to the 1150 or so, before actually gaining some traction again.
And then just give everybody a buying opportunity to get back into the market.
Exactly, but again, one needs to be concerned. It might be that the financial sector is a bit tainted and that it may actually underperform the rest of the market.
Any concerns that this volcano in Iceland could continue on for some time and perhaps even start to disrupt our own preparations for the World Cup?
Well, let's put it this way. If it carries on, there's certainly a potential for that to occur, but I suspect that people won't sit paralyzed. We'll find another avenue to get people around. But as I say, if it ships, it's really going back a century. The issue is, I suspect that one will find is that some airports will, they'll be deem it safe to open, and you'll have partial traffic, even if this persists for some time. It won't I can't see it, being persistent, for months on end.
Yeah, but definitely good for the airport's holiday, and I'm sure Chris